Investing is quite tricky, right? You can't really time the market, and you can't invest if you want effortless cash. The year 2022 has been quite the roller coaster for investors. Another wave of market volatility was brought on by concerns about inflation, increasing interest rates, and Russia's invasion in Ukraine in February. There have been rumblings about the possibility of another stock market meltdown because of all the anxiety and uncertainty about what will happen next. Now, American radio broadcaster, author, and businessman Dave Ramsey has discussed the current state of the stock and cryptocurrency markets since the most often asked issue among investors if the stock market will fall for the remainder of 2022. So is it okay to be in cash at this time or not, or if it is only a correction? But before that, hi, this is Jules, and if you're new to this channel, welcome, and please subscribe to be updated for more upcoming videos like this. Ramsey analyzes excessive stock and cryptocurrency markets over the past year. The crypto market crashed more than 50% from its height, whereas stock markets are typically down 15% from their peaks. All stock market benchmarks are moving down as of June 8, 2022. For example, the S&P 500 has been down almost 15% since the beginning of 2022, but only by about 3% compared to the same day in the previous year. The Nasdaq is down over 24% in 2022 and 13% from the same day last year. Likewise, the Dow Jones saw multiple weeks of losses in a row. But when discussing crashes, it's essential to consider what's behind the stock market's most recent decline. Every stock market disaster has a lot of moving elements. To understand more, here's Dave's discussion on these topics.
CNBC just printed this out. Nearly 40% of investors who pulled money out of markets in the last year regretted it. Oh, so you figured out that when you pull money out of the market that it's a dumb idea because you usually pull it out when it's down. So you bought high and sold low. That's kind of the opposite of what you ought to be doing. All right. Well, the stock market is crashing, Dave. Don't you know? Yeah, I do know. I just pulled it up just a second ago. Let me just tell you what it says today. Let's see here. Today, the stock market is down in the past 12 months, day over day, 12 exact months, 7.5%. That is not crashing. Bitcoin is down 52%. That is crashing.
That's a train wreck.
Okay. That's a train over the mountain in a black and white film wreck. Okay. But 7.5% is not your 401k became a 201k. You didn't lose all your money. Now it's down from, let's see, the high point's January the 4th. It looks like 36,000, almost 37,000 Dow, and the Dow's down around 31 right now. So it's down more than 7.5% since January. But over the last 12 months, it's down 7.5%. That's not exactly a crash. It's not good. I'd rather it be up 17%. I'm not happy about that, but it's not exactly reason for you to panic. Time is the ultimate weapon when it comes to investing, said Matt Schultz, the chief credit analyst at LendingTree. Gives younger investors a huge advantage over their older counterparts. Unfortunately, however, Gen Z and millennials risk squandering that advantage if they pull their money out of the market when times get tough. Let me just help you with this, Matt. All of you are stupid when you pull your money out of the market when it gets tough. You don't have to be Gen Z. You can be 50, 60, 70 years old, and you just go, oh God, and you sell low. That's just the worst possible time to sell it. Ride the wave. Trust that better times are ahead, this quote says. And I agree with that. Ride the wave. So my quote always is, no one gets hurt on a roller coaster except those that jump off in the middle. But here's an interesting thing. Some 38% of investors said they sold stocks last year due to a current event like extreme inflation, Ukraine, whatever, according to a study from Magnify Money. Of that group, 40% said they wish they hadn't done it. The online survey of more than 1,000 U.S. consumers was conducted on April 15.
And the other 60% just
wouldn't admit it.
Yeah, they haven't seen.
They still haven't looked
realized.
at it. They still haven't looked at it. Because here's an interesting thing with the fear that happens there. We've talked about this before, where there's psychological studies done that say you have to gain $3 to feel like you broke even with a $1 loss. Losses have more impact on your psychology than gain does.
Right.
More negative impact than gain does positive impact. Right. And so, in other words, we all are negative ninnies at our soul in some sense, And so, the thing that goes with that then is this idea that then they add a narrative to it when they get out that is hyperbole, that's not true.
That's exactly right.
Okay, so they say things like, well, back in 1987,
Black Monday, I lost everything in the stock market.
What are you been listening to your grandfather from the Great Depression? You didn't lose everything. The stock market didn't go to zero. You had the money in mutual funds and it went down 25% in one day. But it didn't go to zero. It was a cataclysmic event. It was not a good day, but it didn't go to zero. And so you didn't lose everything. What happened was you pulled your money out at the bottom and you felt really stupid, because you were stupid for doing that. And then you had to make up this story that made it sound like the stock market is the villain.
Right, and that you just got off on a lifeboat just in time.
Yeah. Well, and it was just, it's not, you don't put money in there, because I lost everything back in the day or whatever. I had all my money and got to zero. And no, it didn't. It's mathematically impossible. Unless you had all your money in a single company and that company went completely broke and was liquidated and they had no assets and the Chapter 7 bankruptcy trustee couldn't sell the assets and get a dime, because that would have been distributed to the stockholders. So, I mean, this is almost physically impossible for you to get absolutely zero. Now, I lost a lot.
Yeah.
Or I lost an amount that made me feel really scared. These are accurate statements.
Yep.
But we have to add to this somehow to put a stake in the ground to somehow
We have to create a story.
to offset the fact that we know this was a bad idea.
That's right.
Before you leave, you might want to try our Super Thanks, wherein your comments will be highlighted, and join our membership program to support this channel more. Likewise, stock market is a long way run. Now, if you enjoyed this video, don't forget to give this a thumbs up and share your thoughts in the comment below. Thank you for watching and see you on the next one.